Good morning, everyone, and welcome to the Ankerstar Wealth Market Update. I'm your host, Allison Ankerstar, and today we'll be talking about today's stock market bounce, what Steve means when he says we are in a market bathtub, and cash flow versus net worth decisions. But before we begin, as a reminder, this is a financial education presentation and should not be construed as personal financial advice. Full disclaimer information is available at ankerstarwealth.com. Good morning, Steve. The stock market is up more than 1% across the board this morning. What's behind this market bounce?
Well, good morning, Allison, and welcome back, everyone, from the big 3-day weekend. And yeah, well, it's nice to see some green on the screen, right? So here's what we have: everything up across the board. Particularly, though, this is when you kind of put it all in. This is a bounce that's kind of hard to trust, right? And I know that the mainstream media has been overly negative. People that are getting airtime are talking another, 15 to 20%. The hurricane out there that's coming. A lot of negativity from the recession that we're not even necessarily in yet. When you really look at where we've been as a market, a bounce really makes sense. I mean, let's go to maybe a 6 month, because that's kind of your big sell-off for 2022. So, we had the false bounce here. Everybody's like, well, okay, is it over? Is it not over? I thought it was. I did not think the market would go on to new lows here. I did not think the market would go on to new lows here. And I think the same thing at this point. But we shall see. So it's going to take this whole week to really figure out, who's right. Is the bottom in? Is the bottom not in? Where do we go from here? But it is refreshing to see, especially after, such a brutal sell-off. I think this moved down here in this past 5 days. People were getting annoyed here, and then this is fine, then getting kind of pissed off here. And now it's more of the, is it ever going to end sort of sell-off from the move. And, 5 of the past 6 days, 10 of the past 11 weeks have been down. It wears on people, and I get that. Now that's human nature. So one thing that has not happened yet that generally marks a bottom is the retail investor capitulates, which is mass selling, right? So they're going to argue whether this is a steep enough downturn last week that meant really the weak hands finally have been shaken out of the market, if you will, and then it allows basically people to come in and buy. That's pretty steep. When you look at the steepness of this curve, I don't really think there's anything much steeper than that. I mean, this is similar. But really, yeah, I mean, the pain is here. People are feeling it. People are reacting in different ways. Some people are looking away. Some people kind of, wanting to make some decisions with their money. But overall, I think that now, the bounce we have this morning is a good sign. If we would have continued the sell-off this morning, that would be kind of eye-watering, basically coming off of last week. But overall, yeah, it's good to see green on the board, and we will see where the market goes from here.
Next, you regularly say that we are in a market bathtub. What do you mean by that?
Well, what I really mean, excuse me, I think it's a better descriptor than a U-shaped recovery. So let's go to a 5-year chart on the NASDAQ. So here's March 2020, right? So in this area here, and I'll move this out of the way so you can kind of see it. But maybe I won't move. That was a recession marked there in 2020 by the big sell-off in March. And what was very clear at the time was the market overreacted to the downside as we were shutting down the economy, and you got this V-shaped recovery. So you can look at the chart there. You can actually see, the kind of the letter V right here. So shortest bear market ever, right? We go into bear market and we're back out of it. I think it was 38 days. So why I'm using bathtub is because nobody knows where the bottom is here. Here was a little bit, this was down 35% from peak to trough. That was kind of an obvious, that's when I put out the lock and load brief that, it was kind of obvious as to, okay, this has gotten stupid. We need to hop back in. When you look at the last time the Fed tried to raise interest rates, it was back in here in December 18, much more muted. You could argue whether that's a V or a U, but certainly it's not the sharpness of the COVID recovery. So that's what I want people to understand is that in here, in a V-shaped recovery, if you sleep for a few days and don't check in, you miss literally half of the move up. I mean, the recovery is so fast. I'm not expecting that here. We're in the bathtub. I don't know where the bottom is. It may continue down another 5-10% from here. I can't really see it going past that, but or it may not continue down. Today could be the bottom. the important part as an investor is you've already done all of the rewickering in the portfolio. These, the bear market strategies or speculative stuff is already gone. Now you're holding best to breed through. You're looking to raise some cash or add new cash if you can to take advantage of this. But it doesn't mean you know exactly where the bottom is. So when I say the bathtub, that just means the U shape to the recovery, where when you look at definitions in purple here, recession occurs and the economy does not immediately bounce back, but tumbles along the bottom for a few quarters. So wherever that bottom is, it's probably going to be here for a little while, at least a quarter, probably not until the elections get a lot closer for things to move higher. So just a little different flavor for people to understand that this is not, you're not going to get the same level of recovery as you did back in March 2020. It's going to be more like this end of 2018. But that's also when we took the rates right back to zero, which I don't see us doing here. So I think it'll even be more muted. So lower longer, if you will, before we really get our feet under us as a market to go back higher.
Last, the bear market seems to affect people differently. Why is that?
Well, it comes down to when I talk about relationship with money, and again, you can talk for an hour on this topic and not even scratch the surface of it. And it's different for everybody. But when you think of your own personal economy, so you as a person, or you as a family, or you as a business, there are cash flow decisions and there are net worth decisions. So when you think cash flow decisions, those are bills that are coming immediately due, like rent, electricity, utilities, food bill. Obviously, you're not going to just not eat for a month, right? So there's a certain amount of cash flow that you need in your life, whether you're, college freshman or whether you're, running a family or a business. So all of this money needs to have you need to have some money set aside to cover cash flow. And cash flow, generally, if you're working, think of the family organization, you may have one or two adults working, and then money's coming in, the money's going right back out the door. People call that burn rate, right? What's your burn rate per month? If you want to get into geeky terms, but that's a cash flow situation. And you have to always solve your cash flow. Even if you have no net worth, you have to solve cash flow problems, right? Bills that are due right now or coming due in the next 6 months. Versus net worth decisions. Net worth decisions are acquiring assets over a lifetime and letting those assets appreciate, and including, stashing some money into a bank account, and all of that appreciates over time, or you add more money to the bank account since that's not going to appreciate on its own. Those are net worth decisions. So some examples, when you look at you can be, if you ever heard somebody be house broke, right? You can take the net worth that you have, dump it in, buy a nice new house that maybe is fairly sizable, and hurt yourself cash flow wise because you had all this money in the bank. Now you took that and put it into your house as a down payment where you can't get it back out, especially right after you bought the house. And then your house broke. So you're having trouble making the paying the bills in the day-to-day situation. You're either having to run them up on credit cards or things like that. So that's a case of where you are having to make you're having trouble with cash flow, which drives you to make different decisions. Whenever you are in a cash flow problem, you are going to have to sell something generally, or work more, or get a second job, or work more in your current job, or however your personal situation set up. But when you're in a cash flow crunch, you have to make decisions that are generally against your net worth. So if you think you had a set of real estate properties, you might have to sell one to free up the cash flow to cover the cash flow problem. So that's where you can get into, or if you have a big stock portfolio, you might have to sell some of the stock just to cover the cash flow. When you think of Elon Musk, obviously the richest or second richest person in the world, depending on the day of the week, and the stock price, share price of Tesla, but he had to sell a bunch of Tesla stock just to pay taxes, right? So he wouldn't want to sell that stock, but in this situation, he had to go in and sell stock, create a taxable event for himself the following year just to pay the bills this year. You've heard some celebrities talk about, Charlie Sheen was probably, the kind of most ironic one when he's talking about, hey, I'm broke here. I'm down to my last $10 million. And, a lot of us, sitting there might think that, well, that's a lot of money, Charlie. Are you sure you can't get by? Well, in his particular economy, with so many bills rolling in, 10 million might be pretty thin. So If you have all these expenditures to cover, those are cash flow problems. When you get in a cash flow crunch, that's when you have to make a decision that's generally against your net worth type decisions. Net worth is acquire assets over time. Cash flow is make sure I can pay the bills to pay my taxes, or keep the lights on, that sort of, keep the family happy, that sort of thing. So there's a whole lot of difference in mentality there. So if you have a stock portfolio and say you have some taxes due at some point in time, whether the market's up or down, you have to reach in and sell some assets to be able to pay that bill. So that's just one example. There's 1,000 out there. But if you're looking at moving houses, and now's the time, you may have to go into a stock portfolio and sell some stuff that you don't want to sell, even though the market's down, but you do need to get on with your life. So that's, just realize it's a cash flow decision. It's working against your net worth, but you do have to meet today's needs in order to worry about your future, if that makes sense.
Thank you, everyone, for your questions. Please submit your questions as a comment through social media or directly to our email at vipservice@ankerstarwealth.com. And don't forget to like and subscribe to get daily updates. That's all we have for today's show. I'm Allison Ankerstar, and we'll see you back here tomorrow.